Okay. All right, everyone. Good morning. Thanks for being here. I hope you had fun at the trade-off and with Hubert's education there, with the Ichimoku and all, and I think it's very useful stuff, and I hope that I add to the usefulness of material that you're going to be learning about today. So what I usually do and will do today is kind of explain to you why I think you should hang around for 60 minutes and listen to me. So in other words, that's my story. And before we get into that fun stuff, just a reminder, you're in the right place at the right time if you're seeing a PowerPoint screen that says more than mean reversion, trading with RSI power zones. And I'm the second speaker today, so let's keep it moving. So, of course, reminder that as you probably experienced with your racing hearts during trade-off, trading and investing can be very risky business. And the key point here is that it's your responsibility to evaluate any information, opinion, advice, or other content contained in my presentation. So with that, this is me, as you saw on the cover page. I'm Hima Reddy. I have been analyzing trading, studying the markets for over 16 years, and I first learned about them from my late father when I was just a teenager. He was actually a doctor by day, but traded very actively, and especially did so with equity index futures when they were first coming out in the late 90s, and his retirement accounts. So I came to know that my dad was trading and using, at the time, technical analysis. I didn't know if that's what it was called. So I was inspired by all this, and I went off to college in Indiana, go Hoosiers, studied finance at Indiana University in Bloomington, and graduated 4 years later. And of course, when it came to seeing things like charts, candlesticks, momentum, etc., I didn't see any of it. And so my father and I struck a deal. He said, all right, Hima, I'll let you move home. You can work part-time, and I will teach you about trading and investing. So, all right. So I moved back home, and as a 22-year-old was handed this book, How to Make Profits Trading in Commodities, by someone named W.D. Gann, who's pictured here. So have any of you in there heard of Gann? Please just type a G for me in the room, G for Gann. That way I know who might be familiar. All right, awesome. Well, as you can see from the photo here, it's not an Instagram filter or anything. This is actually the photo that I could retrieve. And Gann was prevalent in trading and teaching in the early 1900s, so about 1920 to 1940 something when he passed away. Now, his approach was heavily focused on stocks and commodities because, you know, that was before the computer age, and those were the really active assets to follow. But this book called How to Make Profits in Commodities had rules that applied to any market, or so my father told me. So he told me to start reading it, and at the same time, he set me up with TradeStation software. He said, it's the best, and I'm going to set you up with a small brokerage account so that you can watch the charts. It's the most important thing. This specific chart is of the E-mini S&P 500 futures. So if anybody here trades the ES, just type in ES for me. That way I know who my fellow ES brothers and sisters are. Now, he specifically had, quite a few. He specifically had me on a 1-minute bar chart. And it was not candles, it was bars, and it was 1 minute because he really wanted me to get the most exposure to price action in the shortest amount of time. And he told me to just sit and watch it for 3 hours a day. He said I could pick the times, so he suggested mixing it up between the open and the close and some in the middle of the day. But he asked me to do this for an entire month. And he wanted a month of actual trading days, not just calendar days. So 28 days times 3 hours is over 5,000 minutes of me just watching charts, having no idea what they're about except for what I'm learning from the Gann book. And he was my dad was my guru in my self-made graduate school, so I had to listen to him. Now here's the crazy thing. Very early into looking at this chart, I started to compare the signals I was learning in the Gann book to the signals that I was seeing emerge on the chart. And I was like, oh, I think that that's a buy, and that's a buy, and a sell, and a buy. And it was happening over and over and faster. So as I absorbed the material in Gann's book, which was mostly written out in text, and then had actual past historical charts for reference, I noticed he didn't have any illustrations, right? He was really trying to make you work for it, which I respect. So I took the concepts that were in the book, and I made images on paper and then turned them into graphic images like the ones you see here so that I could have a visual of concepts. Now, when I put these together, I realized, all right, I need to be having access to these, and I made them kind of index card size so that I could print them out, have them by my trading desk. I continued on doing this And then my own idea, not something my dad asked me to do, was to start spending some time after the market closed, but before the next day's session, looking at what had gone on in the ES and kind of writing a report about it and summarizing so that I had some perspective on what might happen the next day. And I called these the skinny on the mini, as you see here. This is a screenshot of an actual email I sent to my dad. So this was back in 2005. And actually, this email is me reminding him to look at it because he hadn't looked at it when I first forwarded it. I called it the skinny on the mini because I wanted it to be the lowdown, the key points, the essence of what that market was doing. And in English slang, the skinny is what that's about. So I started sending these reports to my dad every night and using them to assess my own market views that I was coming up with. And then I realized something. This is the blank of my moment of revelation, is that I didn't want to be only a trader because I really enjoyed the analysis part too. So I didn't want to focus in on only one market if I could analyze more markets and not be so concerned with trading them. And so I thought, okay, I want to be a technical analyst on Wall Street. And I found the CMT Association, which administers the Chartered Market Technician exam. Anybody here heard of CMT? Go ahead and type CMT in the question box for me. That way I know. I'm obviously not the only CMT out in the world educating guys like you. I have many peers who do this. And this allowed me to get a really formal education on top of what my dad was telling me just based off his experience. So I went on to become an analyst on Wall Street and worked at an independent research firm for several years. Then, as you can see here, I got a chance to write my own book on Gann's work. So I was approached by a publisher who was looking to take Gann's very complex work and present it in a sort of beginner first step kind of way. And my story makes it obvious now that that is something I knew how to do. So I wrote my book, The Trading Methodologies of W.D. Gann, in 2012. Now, a little side housekeeping note. This book is out of stock and being resold at very high prices on Amazon and such. So you're welcome to go look at it, but I am trying to get a second edition or ebook version or something back out in the world. So if you have trouble finding it, that's why, but you can always contact my team and we'll guide you. Now, as you can imagine, after publishing a book and doing so relatively early in my career, this kind of opened up a bunch of opportunities for me. So I started doing a lot of presentations and more public things, and I still sent that skinny in the mini out to my dad. And I started including my book readers. Then people like you attending webinars and lectures that I did, and my technical analysis colleagues, because these were the folks who were using the skinny and the mini, using technical analysis, on a daily basis. Now, life moves on. I got married, and my husband and I moved out to Minnesota, and he's from Wisconsin. Now, he's very proud of successfully converting me into a t-shirt wearing and a bratwurst eating Green Bay Packers football fan. So between his Midwestern roots and the jobs we both had out there, he's a cancer surgeon, and he had a great position there, and I managed to get a position at an equity research division of an investment bank. So sell side, which is very different. We thought, okay, we're going to be settling down in Minnesota. And you can understand that working at an investment bank, I could not send my own research out to anyone. All right, so I slowed down there because it said my audio was lost. But if you can hear me, just type H for Hima. That way I know you still hear me, please. Okay, perfect, thank you. So thought we'd settle in the Midwest, had to go back to all the people who'd been getting the skinny on the mini now for a couple years and say, hey, sorry guys, show's over. And they were super upset. This shocked me because until then, I'd only gotten feedback from my father, who was actually making trades and profits off of my levels, off of my market timing, off of my indicator observations. But now all these strangers were telling me about that too. And they really hoped that I'd bring it back to them one day. So I thought, you know, I've got to do that. And a couple years later, my husband and I actually moved back to my home state of New York, but to Buffalo. It's where I am now. And I thought, okay, I'm going to leave my sell side job, and this is it. This is my chance to bring back the skinny and the mini for good. So I went back to all these happy people who'd been missing my work for a while and said, let's do a monthly subscription situation here. And they all started happily paying me for it. So just let that soak in for a second. People started paying for something they used to get for free. That is how valuable it was to them. And on top of that, they wanted to understand not just what research I had each day, but how I was coming to it and what tools I was using to come up with this market analysis that they were depending on and seeing as having a pretty good batting average. And that's what gets me to being here with you guys in TradeThirsty, all right? And I think that this shows you my unique path, which isn't just early, but also very much something I had to figure out on my own. Now, let's go to the concept I want to teach you today and an actual signal that you can go use in the markets straight away. So what I'm going to teach you today is coming out of one of my product vaults, if you will. So if you go to my website, himareddy.com, and you click, hey, I want to log in, then you're going to be taken to a page that looks like this. And there's these 3 tiles. Well, what I'm going to teach you today, I'm pulling out of my course, Top Trading Strategies using RSI Power Zones, my newest course. And I'll tell you more information later about how you can get involved with that if you like. But this is where it's coming from. So, as I mentioned, my husband got me onto football, and 6+ years marriage later, I'm still watching it. So here is a football field, an American football field, for anyone who's not familiar. And you get 2 players on each side of this 100-yard range. Okay, so of course we're going to use the Packers. This is the best stock image of a Packer I could find. I think he kind of looks like Aaron Rodgers, so I'm pretty happy with it. Now, who would you guys say is the Packers' biggest rival in history? Because I saw a couple of you respond with your favorite football teams. Who would you say is their biggest rival in history? Vikings, definitely a rival. Bears, yes. And Tom Brady is definitely not a friend, but I would agree that the Bears, as Mark said, is their greatest historical rival. So these 2 teams are on the football field, and they each have the same objective, just in opposite directions. The Packers need to get through the Bears' defense to get to their end zone to score points, right? Nothing happens in the middle of the field, just lots of running around and throwing and grunting and concussions and all that, but no points are scored in the middle of the field. You've got to get to the end zone and score either a touchdown that gets you 6 points or a field goal that gets you 3. Same thing for the Bears. They've got to get through the Packers defense when they have the ball to get to their end zone. Okay, opposite sides of the field. That's important to remember as we dive into the indicator that I'm going to tie this into. So let's take this football field and turn it on its head. Now that we've done this, we can take that 0 to 100, all right? Technically, the 0 to 100 only covers the green part of the playing field, but we're going to expand that out a little for my analogy or metaphor, and we're going to make the entire football field a 0 to 100 range and put it down on a chart. And this beautifully works out to line up with the same range as the relative strength index. Now, before we go into the basics of the relative strength index, I just want to know if anyone else is using that out there. Not if you've seen it. I want to know if you've actually put it on a chart and tried to trade with it. So you can type RSI for me, please. That way I know that you're answering that specific question. Gives me perspective here. Okay, lots of folks. Awesome. All right, so when you put your RSI on your chart, it probably looks a lot like what you see down here. Okay, this is the TradeStation default. So we're going to just go through real quick what these are, and then I'm going to tell you how I use it. Now, one thing that's very important, I'm going to start using a highlighter now, that's how important it is that we are not changing the standard 14 period setting, okay? The relative strength index has very complex calculations derived from price that looks back a certain number of periods, whatever you set it for, and that you take that setting and move it forward in time, like a moving average. So you're always looking at the past X number of periods. Here, we're sticking to 14, and we're not going to change that, right? So first important note, on your paper and your pen, on your notepad, on your scratch pad, whatever you're taking notes with today, for the RSI that I'm going to show you, we are not changing the 14 period, but we are changing other aspects of it, okay? So it's super important to remember. So let's go into what the traditional approach is real quick, just to make sure everybody understands how you would use this if you hadn't met me. So if you hadn't met me, you'd have rules somewhere in a textbook or in your indicator information in your software telling you that when this indicator gets above 70, it's generally signifying overbought conditions. So that would be any of these red default changed lines on my trade station. There's a lot of them in this situation. Now, you can see that this particular chart is of the ES contract, continuous daily. So clearly this is a raging bull market. I'm not saying that this indicator only works for strong trending markets. I will show you several examples on several asset classes and several time frames. Just bear with me here, right? You've got to learn the indicator before you can jump around to different examples. So here you've got a couple situations where if you were trained to think, okay, above 70 is overbought, then you would be itching to pick a high, pick a top in this market every time you got this reading above 70, even though it was strongly trending. Now, of course, you're going to use the RSI with other tools that already exist in your trading toolbox, but do you see how the psychology can kind of mess with you, all right? Now, on the downside, sell signals live, or excuse me, buy signals live in the oversold zone. So that's 30 and below. So in this situation, there were two instances when the RSI fell below 30 and then rallied back up. Now, when you have these situations, in this setup here, you can see they provided great long opportunities. But what about everything along the way? Okay. By design, most people understand the RSI or any momentum indicator to only really be helpful when you're in a trading range. But I challenge that and say, no, you can use it when the market's trending, and I'm going to show you how. Okay, see all these yellow highlights I just put in are opportunities where you could have bought, but this particular indicator wasn't telling you that. So how do we use this differently to get more out of it and be able to use it in different market situations? Well, this is where you are going to write your first parameters down of how everything's going to be used, because when it comes to using only the standard approach to overbought, oversold, we are calling BS, okay? No offense to Mr. Wells Wilder, who released this in the 1970s, but it's not actually something that is a new concept, what I'm about to show you. I learned about the parameters that I'm about to show you when studying for the CMT, because a team of technical analysts looked at the RSI when it came out and started doing their own in-depth studies on it, and they discovered the following that I'm going to show you. However, every signal that I'm teaching you today, I have derived from 16 plus years of using these parameters. Okay, so let's be clear on what's original thought for me and what is me taking something traditional and just using it in a different way. So remember the bears. Okay, I want to know I have you guys with me here. I see a lot of questions coming in, but in order for me to keep pace on this tight day, you can circle back with your questions if they don't get answered by the time I'm finished teaching. But let's look at this football field again. Remember the bears. The bears have to get to their end zone. Now the market bears also live in a different part of the field than the bulls do. So this is the first change to the RSI that we're implementing now. I call the RSI, the way I use it, RSI power zones, and you'll see that reflected on my upcoming charts. Why? Because the zone reference comes from my football way of thinking about it, and they're very powerful, so we call them power zones. So the first set of numbers to write down is this. In a bear market or a downtrending market, even if it's just corrective, the RSI generally finds resistance from 55 to 65. That's this orange or red shaded area I just drew out, not necessarily up at 70. All right? So you guys make sure you've got this down. What is the bear resistance power zone? Type in the numbers for me, please. You're going to see this in a lot of other slides. Okay. Great. Awesome. Thanks. Now, the bear support power zone is 20 to 30. Okay? So those values include the traditional 30 level, but by allowing yourself to look at it down to 20, it prevents you from getting too bullish too soon. Okay. So we've got a bear resistance power zone of 55 to 65, bear support power zone of 20 to 30. Okay, we're not looking at 30 and 70 alone anymore. We're looking at 4 distinct zones. These are the 2 for the bear situation. The market bulls, as you might imagine, live in the upper part of this chart, meaning they don't get as oversold in terms of their RSI value, and they get more overbought before there's an actual price turn. So the bull resistance power zone is 80 to 90. This prevents you from looking at 70 and starting to get that itch to pick a top. Look here at this raging bull market, as I said earlier. There were only several instances where it actually reached the bull resistance power zone and then hung out for a while. So here, you would have kind of had a little bit of time before the top came in. All of this ended up just being the market working itself off, not changing the trend. And this is why when you use the signals that I apply to this, the power zones really come to life. Okay, it's not as simple as just trading back and forth between the zones. That is not what I'm telling you to do. But look at this last section here, okay? So this chart is through February 19th. So I updated it on Tuesday morning to capture as much price action as I could do while still having prepared charts for you, because as Hubert said, I have a little bit different style, and while I do go to live charts, time permitting, when I've got a tight 60-minute period, I like to teach you in a very, very obvious and sequential kind of way. So I pre-prep all the charts, but I get them as recent as I can. So if you got this February 19th action, you can see this was the recovery that we had after the early February low. But all of that previous price action that was right here was 80 to 90 bull market zone. Okay? This is something that would have been still kind of probably keeping you in that, oh wait, are we going to form a top soon? But you see at least it eliminated this entire back section here where it was just above 70, and all this noise and all this noise here, just that 70 number would have gotten you too bullish or too bearish too soon. All right, so let's take this final set of zones, and then we're going to go and teach you the signal that goes with these. Bull support power zone is 40 to 50. Okay, so if you haven't gotten the numbers down, don't worry, because you're going to see them in every chart. Can you guys hear me okay? I know it's been a little bit mixed this morning, so please type a K for okay if you can hear me just fine. And if majority says yes, then I'll keep going. Perfect. Thank you so much. All right. Here is the signal. We're going right into it, okay? RSI trend line buy. This is the setup that you look for on the momentum indicator itself. Step one, you've got to have a price uptrend. Either one that's in place, where you have a series of higher highs and higher lows, or one that is forming. How to identify that it's forming? There's several technical analysis patterns and rules. The rules I use are derived from GAN signals, and I'm going to show you on the examples how this works out. So you've got a price uptrend, okay, either in place or forming. Now, the next thing is that you look at what the RSI is doing, and you draw an RSI trend line, a rising trend line, where the second higher low is forming in the bull support zone. It's got to be in the bull support zone, which is 40 to 50. And again, you're going to see these on the chart, so don't worry if you don't have the numbers memorized yet. The third touch of this trend line that you drew is the buy signal. It's imperative that you use price action to confirm this setup that you're seeing in the RSI. Okay? Momentum is derived from price, but price is king. Price tells you much more than any indicator could, in my experience and opinion. So while the indicators can give you a heads up and clue you in, if price doesn't follow through on the setup, then don't take the signal. And I'm going to show you what that looks like. But I'll let you guys take a moment here if you want to capture a screenshot, take a picture with your phone, as long as you keep it to yourselves, okay, because you took the time to be here Saturday morning, or you may be watching the recording and you took the time to watch it. So type a P for photo if you've got your screenshot, your snapshot, you're good to go. You have the rules written down at least, okay? You have them for reference. And I'm going to go through several examples, and we're going to go step by step by step. Okay, awesome. Now, before we go to several examples, read this little sentence to you up here while I get a swig of water. RSI power zones can be used for analysis and signals on any active market in any time frame. Here are a few examples. Here are just some common markets that we all trade, analyze, observe, etc., and some common time frames. Doesn't cover out everyone, but I tried to put the most common out there. So please type me if any of these apply to you. I hope I would cover the majority of the room. You trade one of these asset classes or you trade one of these time frames. Okay, so this confirms that I'm onto something, that I did get the majority pool here. Now, let's pick an example. Let's take an individual stock and let's look at it in a 5-minute chart, because we just saw futures on a daily chart. All right. Let's take Amazon, because I get questions about FANG stocks all the time. And this was a signal I saw just like less than 2 weeks ago. You can see, and if you're ever lost on what market we're on or what time frame, it's a very simple formula I use. The ticker symbols first. The time frame of the chart is second. So a 5-minute chart means every one of these bars is 5 minutes. And then the amount of time or the lifespan of the chart I'm showing you is noted, okay? The dates that are included. So for an intraday chart, this is a rough estimate. I'm not going to show you, okay, this chart starts exactly at 12:55 p.m. on February 12th. That doesn't matter. It gives you perspective that this is a recent chart. All right. So what's the first rule? Price uptrend in place or forming. In this situation, we have a price uptrend in place. Look at the blue highlights that are coming up. These are your high or lows that define the price uptrend. All right, now, the part where you actually have to look for something and get it in place on your charts is you've got to look at the RSI power zones action, which now you can see, guys, I've updated my indicator to reflect the RSI power zones. And instead of using shaded areas, I use actual lines. I find that easier to see when the RSI value is inside or outside of a zone. And I created this indicator and have it available for anybody who's wondering, and we'll get to that at the end. But here we have to look and see, all right, we're in an uptrend, so we want to look for an RSI trendline buy. There is a sell version of this signal, and I'm going to teach you that as well. In order to look for the RSI trendline buy, we want to see, are there higher lows forming in the RSI comparative to a previous low, with that second low being in the bull support power zone? Well, there is right here and here. That second arrow is the higher low forming in the bull support power zone. It is between 40 and 50. So you just draw a line. Now, this is a line drawn on PowerPoint so that I could make it all fancy and animated for you, but these lines look very similar when you draw them on your indicators, on your charting software platforms. Make sure that you're using whatever setting it is such that you're snapping or connecting exactly to the lows. So in TradeStation, it's called snap mode. And it means that you're actually, when you draw the line, it's not going to be free form. It's going to connect exactly to the point you want it to. That way you have the most accurate lines. All right. Step 3. So this lines up with this price action. This is just the setup, right? This is not a signal yet. We're waiting for the third touch. Third touch of this trend line on the RSI becomes the buy setup, and we used price to confirm. So we've got the third touch on the RSI, and price started moving higher. What is the price confirmation here? Well, this is where I will use a little bit of a pen to kind of show you. Just like we had a correction here, this is a corrective price move. We know that because it's staying above the latest higher low on price. So this setup right here, whether you look at it as candles or bars, doesn't matter. This green line right here, or green candle, was an inside day. And we had a break of an inside day, closing above it. And that is the action signal. Okay? Because you already got the third touch. Once you see the third touch, you're looking for price to confirm. So I'm going to give you the exact parameters you could have used, and I'm going to give them to you in a realistic fashion. It would be very lovely if I just draw from the low to the high and say, look at all the money you could have made. But that's not how we trade. We trade when we have confirmation of signals, not when they're hinting at us. So this is the price action that played out. And here's another good point if you would like to take a photo after this slide is complete so you can see the full setup, okay? We have the RSI trend line by the bottom. So we have the low number 1, the low number 2, and this is low number 3 where we actually take action. And then here's the actual setup. Okay, so it's not this bar that broke above the inside bar. We wait for that to close. On a 5-minute chart, you won't know if the inside bar was broken until that happens. So it's that little teeny tiny bar right here, which I'm going to tell you was 12:35 p.m. on February 14th. You can go look back and double check this. Okay, so 12:35 p.m., February 14th, Amazon 5-minute chart. If you go long, or I understand a lot of you are not trading the stock outright, you're doing option strategies around it, use this concept if you're going to do a bullish option strategy now around it. So going long, and the price is 1436.20. And look at where I say you're getting out. Why? Well, because the session's coming to a close. And let's just assume that you're a day trader of Amazon. Again, unless you have a very, very large bank account, you're probably not a swing trader of outright Amazon stock. Maybe you're doing options, fine. But let's just say you're doing this on a intraday basis. Don't wait until 3:59 p.m. and 45 seconds. Just take the money that the market gave you and get out at 3:55 p.m. That's what my dad taught me. So in ES land, he would really get upset with me if I had any trades on still after 4:10 p.m. because that market closes at 4:15. So he's like, just don't be greedy. Take what it gave you and let those last 5 minutes play out. So let's say you're still long. You no indication just based off this signal. There are other tools I use, obviously. And then just get out at the market at 3:55 p.m. So 14:51.20 in this situation. So just in this example and in this big stock, that's a $15 move in one afternoon off this signal. And if I did the math right, that's a 1% or 1.04% share price increase. And does anybody trade options on Amazon? Type O for me, please. Just give me perspective. Or any big FANG stocks or any high price stocks. Option plays on high price stocks are a very popular approach. That's something else my dad taught me. Okay, I see people writing Apple, Facebook, etc. Okay. So all of this shows, let me show you too, how the zones came into play here. Okay, we happen to have, now this first low doesn't have to be in the bull support power zone. It's this second one. This is the one. This is the very important one. It gets a star. The third one obviously needs to be a higher low. So naturally it's going to be in the bull support power zone or higher. And all this time, price was just trucking along and RSI was just improving along. But notice after the fact, the next morning, even though it gapped higher, look where it gapped to on the RSI. Bull resistance power zone. And all this nasty sharp correction, all it was the RSI kind of unwinding and taking a breather and going from the bull resistance power zone to the bull support power zone. This kind of thing you see very, very often. So this observation of the power zones will help keep you with the trend. This example, this signal, guys, is why I titled this presentation More Than Mean Reversion. Okay? Mean reversion means coming back to an average point. So you're only trading in the opposite direction, looking for a higher low. Here, were we trying to pick a top? No, not at all. We were using momentum to trade with the trend. That's why this approach to the RSI power zones is a little unique, at least from what I've seen, because it's not just looking for tops and bottoms in the market. It's allowing you to trade with a persistent trend. And I know right now the markets are volatile and a little scary maybe, but there are still trends in there, especially on intraday charts. Okay, so I just gave that very philosophical explanation. So please type a T for trend if you understand how I just use momentum to trade with the trend, not against it. All right, cool. I have more examples, and I've got 25 minutes to keep us on time. So let's move it right along. Okay, let me clean up this chart. So we just did individual stock on a 5-minute chart. Now let's go to an ETF on a monthly chart. I know it's kind of random, but when I was looking at the charts last week, I thought, you know what, I want to show you guys perspective of how this really works on any active market in any time frame. And this is a situation where I'm being so bold as to show you a setup I see happening now. I don't know how it's going to play out, but it just brings your attention to a setup happening on a monthly chart. So it's GLD. GLD is a gold ETF. Monthly chart. So this chart is showing price action back to June 2006 to current. Now this was current captured again on Tuesday. So again, we see the price uptrend forming. This is the part where I get to teach you guys a GAN signal. All right. So in my book, I take the signals that GAN taught in the commodities book and I create visuals for them. And I walk you through each scenario. So the naming of it is not important right now, but here's what I want you to understand of the structure of it. Looking at these two lines right here, there was a downtrend in place on this monthly chart. And I'm going to draw the swings as I see them. So for that, I'm going to actually change my pen color to purple. If I did that right, yes, to match the purple line. Okay. So we had a move, we had consolidation, then clearly we had another move down. Consolidation, consolidation, move down, up, down, up, down, up, down, up. Now all of this to me is a very choppy thing, so that's why this high right here is more significant on a monthly. All right, so I'm going to take those lines off and focus us back in. So this was the high that on the monthly chart, if we were going to get above it, would suggest that we might be turning higher. And notice that we came up to the bull resistance power zone on a monthly chart, and all of this stuff that was going on worked its way down to a space between the two zones. They don't obviously act as, you know, hard stops every time. But look at where the tail end, all this like diagonal ending, if you're Elliott person, you're looking at this and saying, oh, this was possibly an ending diagonal in the, you know, multi-wave correction. All of this was happening with RSI stabilizing while above the bear support zone. It wasn't getting down into that. So that's just how you look at the zone action. But this move higher is the first sign that the trend might be over. This move lower is corrective, and this price action right here is GAN's safest buying point. Buy on a secondary reaction after the chart has crossed previous tops. And look at where this is happening. This low formed with RSI in the bull support power zone. So this is the situation of the price trend forming to the upside. Second step, we look for RSI trend line where we can anchor that second point in the bull support power zone. Here's our lows, here's our trend line. I'm going to keep the pace moving a little faster now because I really dissected that Amazon example, and I want to make sure I teach you the sell signal. All right, so everybody who's still with me, please type a G for GLD so I know you're on this chart with me. And you've got your rules and you're following along with them. Sweet. Okay. Third touch of the line becomes the buy setup, and you use price to confirm. This was the third touch. It wasn't necessarily after a new high. Okay, so don't judge when the touch happens, as long as it happens after the second low and as long as it's a higher low, because if it wasn't a higher low, it would break the trend line. That's your setup. So based on this, on a monthly chart, because the third touch low, this is where I need a pen again, okay, this was the third touch low, all of this price action. But from a price point of view, we don't know that the trend is resuming higher until we break above that high, right? And this January bar right here broke above that high. So the open of the February bar. So going long at the start of February would be the signal. Now, this is a monthly chart. This is an ETF. This got a lot of action going on in it. I have had people challenge me and say, oh, but given the current rate environment and this and that, and I agree, you should consider other things, but I'm just showing you a setup and how it can form in a monthly chart, just in the same exact way it can form in a 5-minute chart, okay? Again, it's up to you to go take these concepts and practice them with fake money, simulated accounts, trade-off. You can go in your trade-off account and add the RSI. Now, don't think it'll have the power zones on it. It'll just have the standard 30-70, but eventually you'll be like me and you'll memorize the numbers. And somebody could give me an RSI with no numbers on it except for 0 to 100, and I could have an idea of 0 to 100 and a 50. That would be helpful. And then I could know, all right, this is where the RSI is, all right? So here are the examples we just looked at. We've got one more in the buy. Actually, we've now just got one in the sell category, and this is going to be of a commodity future on a 15-minute chart. So we're mixing things up. RSI trend line sell. Get your phones or screenshot stuff ready. Same rules in the opposite direction. Price downtrend. Lower highs and lower lows, either in place or forming. We sell in downtrends, we buy in uptrends. That's what trading with the trend means. Falling trend line joining RSI highs is what you're looking for, with the second lower high forming in the bear resistance power zone. So now we are looking for that increased likelihood of further downward momentum because we're caught with RSI in the bear resistance power zone. That's 55 to 65. The third touch of the RSI trend line becomes your sell signal, and you use price action to confirm the signal. So take a second here. This is literally the same exact type of scenario, except obviously in the opposite side of the field, if you will, and we're going to go through an example of it. All right, so if you could type a S for sell when you've got this jotted down or screen captured or photoed or whatever, because I want to make sure you guys get it so that you can practice with it later. S for sell, that way I'll know. You guys are awesome. I love how the attentiveness, especially for Saturday morning. Okay. So we are going to use oil. This is another market I get asked about a lot. 15-minute chart, continuous contract chart in this situation, but obviously it's the 15-minute chart. It's going to represent the latest front month. And look, I picked a chart from that little funky time we had in all the markets, end of January into early February, because I saw the signal. Actually, if I brought in all the examples I saw, we'd have a 2-hour presentation, but I brought in the key ones that I know I could teach you with. So, price downtrend forming. How do we know? Because we have series of higher lows, and now suddenly we're breaking below it. So there was this big distribution situation. Distribution is the market, whoever owns this contract, handing it out here and there, taking their time, possibly an institution, we never know, but just assume that when you see long periods of distribution like this, where the market then turns down, or long periods of accumulation, where you see things build up like back here and then suddenly go higher, that it is not just, you know, your friend down the street who's trading with you. There's a lot of big institutional activity in many markets, especially one like oil. So I presume the big guys are distributing here, and this is the first clue that this trend might be changing. Now, this trend changing on the 15-minute chart only is in perspective compared to these higher lows. So just because the trend is changing doesn't mean I'm saying it's going to fall like this. I'm just maybe expecting it to come back towards this low, all right? So that's the downtrend forming, and here is a falling trend line joining RSI highs with the second high forming in the bear resistance power zone. Oh, I wanted to highlight that here, I missed it. Okay, so right here, I'll go straight up as fast as I can. So this is why it's important to differentiate that the second high where you draw is not the sell signal. It's just where you're able to identify that this setup may emerge. You may draw trend lines and then not get a third touch signal. That'll happen, just like on price when you draw a trend line and you may not get a pull back to it. Now we have the third touch with the second yellow highlight, and you can see that came in, and it was in the bear resistance power zone, but that is, or that's naturally going to happen because we're looking for a third lower high. It could have been down here, it could have been even lower, and that would have just been a sign of an even weaker market. Okay, the second touch being in the bear resistance power zone is important. The third touch for the sell is all we care about. We don't care about anything that happens after. I'm going to show you that in a little key points slide coming up. Now, in this situation, how would you have acted? Again, because I can show you this and be like, oh my God, look at all this money you would have made if you shorted. Well, how would I really have traded this? Or how would you be able to actually capitalize on this? Well, how about as soon as you got that big, nasty bar, okay, so let's be clear here. We had these two long white candles correcting upward, and then this giant red ugly candle that also took out this previous low. I think anyone looking at this chart and seeing that we got the third sell would be like, okay, it's time to sell. Even if you can't name the candle pattern. It's the colors and the size of them that shows you that. So you go short on the open of the next bar. It's the simplest thing. Stops and placement and all that I'll get to in a minute. Where do you exit? Well, this is real life. So as much as we would like to think that we would have been able to call this bottom real time, we won't necessarily have a signal to. So let's say we don't and we just get out on a trailing stop, which is actually my favorite way to exit the market because the market tells you when it's done, okay? It's like, I don't have kids yet, but I have a lot of friends who have small children and I've seen them feed them in their high chair. When you have a kid who likes to eat a lot, some do, and you take that bowl away from them before they're done, you have a tantrum on your hands. But if you let that kid finish what they're doing, put the bowl down, start looking around, or sometimes even start falling asleep in that chair, it's safe. You can take it away then. That's what this move right here is like waiting for the kid to finish eating and then stepping towards the danger high chair zone. It doesn't get you as much of the trade as you would like, okay? You're basically getting in here, $65.59, and getting out at $65. If you try to grab it here, sure, you'd make money, but what if this consolidation resolves to the downside? The psychological damage of a trade that you exit too early but was still making you money actually can mess you up even more than just a straight out loss. I've experienced that and my dad warned me about that and I remember times when it happened. So just be patient and let the market take you out. So what does this all shake out to? Well, if I got my math right and a cent on oil is 10 bucks, then that's a $690 move in one morning. And I would think that that's a pretty nice way to spend your morning if you're trading oil. All right, so I have everyone with me and I now am getting close to the time where we need to hand the baton over to the next speaker. So you've learned the signals, you've got the rules for the buy and the sell. Now I want to give you two final pointers, okay? For using RSI trendline entry signals, whether it's a buy or a sell, we are not concerned about the trend line staying intact after getting the third touch signal. Don't worry about it. Don't even keep the trend line on your chart. Once it's done and you're in the trade, just take the trend line away. That way you're less likely to get confused. It is possible that you get a fourth or fifth touch signal. I've seen it happen, but I'm not teaching you that because those are much less reliable, okay? Fourth or fifth touch signals may occur, but we are focusing on the third touch only. That is it. All right. So with all this, I've taught you something. I see some great feedback in here. Thank you very much, Gina, David. I appreciate the nice comments. And I hope that you all take this and actually go look at it on your charts. Now, questions you probably have. How do you determine where to place protective stops? I just gave a wonderful high chair analogy of how to use them, but I didn't tell you where they go. Again, time constraints. How about trailing stop placement? Or are there other entry signals associated with RSI power zones? Or how do I put this all together from the first steps of making the trade to the last? Well, that's where we come back to the top trading strategies using RSI power zones. And I pointed that out early on. I didn't sneak that in. I told you that I was going to tell you about this. So what this course involves is how to incorporate RSI power zones into all 8 phases of the trading process. I wrote in my book about 8 phases of a trade because it just made sense to me that they move in this constant wheel from step 1 through 8. So I cover that. It's everything from trend assessment and signal observation out to trade exit and review. I consider review a step in your trading process, and you should as well. Specific setups, adjustable based on your risk tolerance, and there's a cheat sheet in there as well. So a cheat sheet for me is anything you can take away, like those little diagrams I showed you, and print out or have at easy access while you're trading. So I give you a PDF that you can print on paper or just load onto your screen. So everything I just described is on-demand education in a secure portal that you would access once you sign up. But on-demand education is great, but it doesn't allow you to then soak it in and come to me with your questions or hear other people's questions. So the live bonus session for this class, I like to run my courses as distinct classes, which this one's starting now, obviously, would be about a month from now. So live bonus session is Tuesday, March 20th at 4:30 p.m. You come there live, we go through your questions, we go through markets, we look at setups, we take what you've absorbed from the on-demand education and see what's happening in current markets. And this gets recorded. So let's say you already know you can't attend that date, don't worry about it. It gets recorded and put in your portal. And you have access to the on-demand education and to the bonus session for life. Just, it's all yours. And like I said, we have Q&A, live tickers, and more. Now, I don't want to just give you something now and then talk to you 30 days later. So in the meantime, you're going to get examples of RSI power zones in action every single trading day. And this is through 30 days of my Skinny on the Mini service. I have RSI power zones on every chart. So what I use in that service, or what I provide, is daily analysis, Monday through Friday, of E-mini S&P 500 futures. Monday and Wednesday analysis of E-mini NASDAQ futures. So ES on every day, NASDAQ mini on Mondays and Wednesdays. Now, if you join this class, your first issues of me mailing these to you will start this Monday, February 26th, and they will continue through Tuesday, March 27th. So you'll keep getting those newsletters after our bonus session, so you have time to reflect on what you have learned from the bonus session. Okay, so far we've got on-demand education and access to Skinny on the Mini. Now, Skinny on the Mini doesn't just include me emailing you my newsletters. Okay, this is what it looks like, and then I'm going to show you what else it includes. Typical Skinny has this format: my chart marked up with details of the chart, just like I did with you today here. And then the really important thing I do is, well, the time frame is almost always a 60-minute because that's, to me, the pulse of the ES market. But I will change it if we're going slower than that or faster than that. But here's the really, I think, unique part of this, is that I have a gray vertical line on every chart that marks the time at which I published the last report. And I put my commentary from the last report in the report. So there's no getting around me being accountable to what I'm telling you. And then we move on to a recap where you can see very clearly if the analysis I provided you was helpful or not. We move on to the outlook. Sometimes it's lengthy, sometimes it's shorter than this. And then we finish off with resistance levels, price ceilings, potential price floors, which is support, and trend line descriptions. I use trend lines a lot, and I use them a little differently than some people have come across, and I give you how I'm drawing them on the daily chart. So you can have them on your daily chart at all times and understand as I'm talking about the intraday action around them. Now, all of this will be in this Skinny portal on that same login page, and in addition to getting the newsletters emailed to you, you're going to get the past 30 issues archived that's already in there in the portal. And every month I have a member session for Skinny on the Mini members, and those are recorded in the portal. I started that last year in the summer, so there's like 6 or 7 hours worth of educational video just in that portal already. The catch is you have 30 days access to this only, whereas you have lifetime access to the course. Okay, it's a lot. So I'll recap what all this is. One more element you get, of course, is the RSI Power Zones indicator. So it's the RSI with the standard 14-period setting as the default. Don't change that. Leave it alone, and you'll have the bull and bear zones drawn out. You can see all the software I have it for up here. Some of the major ones, TradeStation, of course, both versions of NinjaTrader, Thinkorswim. Right here, I'm just read them off quick. Sierra Chart, Trade Navigator, eSignal, and then for Ensign, I have a customer use it, so he gave us setup instructions. All right, so let's put this all together, but first, listen to your peers. So Robert from Canada said, in just a few months, Hima's RSI indicator has become the standard in all of my charts and uses multiple different software providers. David from Washington, I installed the RSI Power Zones indicator, and it's just amazing how accurate it is on all markets. It actually gives advance warning before the price moves. Susie from Colorado, my first month using RSI Power Zones was also my best month trading so far. These are their experiences. I'm just relaying them to you so that you know it's not just me. other folks have come to use this indicator and apply the signals and tools that I've taught them around it. So, special offer today for you guys at Toast to Traders is the following. So the value of this course, if you just pieced everything together, is about $2,000 in terms of the education and what these signals are to you, taken from my 16 plus years experience. Skinny on the Mini 30 days access to the value of all these different elements is shown here. The value of the RSI Power Zones indicator and the live Q&A workshop. Again, all of this representing time, efforts, work put into these things. This is over $4,200 in value. But today you get to get this for $297 only, and you can sign up at himareddy.com/top. So that link is going to stay on the rest of the slides that I show you here because I want to make a few more important points. But you get, again, the on-demand education, the 30 days access to the Skinny, RSI Power Zones indicator, and Q&A workshop together. Now, why do you need this course? Why can't you just take what I showed you today and be all set? Well, again, I gave you just one entry signal. I have more. Plus, if you have exits and stop placements, then you're really optimizing your use of RSI Power Zones. And as I showed you with a little exploration of one signal, this combines my GAN analysis approach with this powerful indicator. And frankly, why try to figure this all out for yourself? Save yourself time and money in the long run, and let me show you. Now, this I thought was really interesting. So I did a preview of this course to my past subscribers and buyers of my other education because they're kind of already with me. And so a day after learning one of Hima's RSI Power Zones trendline signal, oh, that was the buy signal, okay. He showed me the chart. He tested it out in a 5-minute chart of Tesla. Now, again, you should practice before you use real money, but this is what Norman did. And with this one trade, he made enough to cover the cost of this course. He came back and he bought it. So this is, again, a recap of what's everything that's in there. And I'm going to show you what happens after you sign up. Why? Because there's a lot of products and great education and systems and things being offered today, and I want you to be clear as to what will happen from himareddy.com if you join this class. Immediately, you would get a course resource center login info. This takes you to the top trading strategies course. So that's where the on-demand education is and the RSI Power Zones indicator. And eventually that's where the recording of the bonus will go. Also immediately you will get your Skinny and the Mini members portal. It's just a separate email, but it will give you instructions on how to log in to that portal where you can go look at past issues. Again, you'll start getting them emailed to you on Monday morning, and you can look at any of my archive member sessions. Now, give a little time for the next few, okay? Because we didn't want to flood you with emails. You get a welcome message from me. When you get that welcome message, you'll see that means that you're on the list to get the email newsletters. You'll also get a live bonus webinar registration from GoToWebinar. We just hook you in, and you'll get a receipt, of course, proof of your purchase, okay? So 5 emails to look for after you sign up. Now, I want to show you a couple more examples while I have 2 minutes, and I see some questions here. For those of you who are interested in becoming Skinny and the Mini members after the first month, you'll get that information in the bonus session. You can use the indicator cat for any platform, okay? If you use multiple platforms, just download any of them. You have that for life. So let's say you use something now and then you buy TradeStation later, you can go get the TradeStation one, no problem, okay? Divergences, yes, that's a signal I teach, Daniel, and that is addressed in the course. All right, so I think I got covered the main urgent questions, but let's look at this Netflix daily chart. You can see in the bottom here, this is a daily chart. This is as recent as I could get capturing this on Tuesday morning. There was an RSI trendline buy that corresponded with the February 9th low in the market. Pretty cool, huh? Observation of this would at least kept you set for the possibility of recovery higher. And this candle right here is a hammer. It has a red body, but it's still a hammer. You can't take the second touch, TJ, because you won't know that the trend line is valid yet. A third touch is what makes the trend line confirmed. Okay? So the second touch is you seeing the formation of this pattern come into play, and it's the third touch that's the powerful signal. 10-year futures, okay? Trying to mix it up for you guys. I have bond futures out there, bond futures traders out there. 60-minute chart. we have this signal back here. The third touch came a lot closer to the second touch than the other examples, but it was still there. Currency futures, do we have any FX? You can type FX for me, and this is the last one, and then I'll hand the baton over. Again, himareddy.com/top, and I'll come back to the summary slide in a moment. But AUD/USD 15-minute chart, look at that nice, clean setup on a 15-minute chart, and boom, that third lower move was really the key of the day. Okay, so I'm just going to come back to the summary page here of what's all involved, and thank you guys for your time, and stick around for our next lineup of speakers, and thanks Jeanette, buddy, for having me.